Okay, so we've got Halloween themed this month, and what could potentially be spooky is what's coming next with all this news events or all these news events that we've got. So let me just first of all, where's my Discord? Here it is. I'm gonna pull this up just because I made reference to it yesterday. Couple things on the radar today. We've got ISM manufacturing PMIs. And we've got JOLTS job openings. Both of those come out in the next hour. We've got 10 a.m. JOLTS job openings and manufacturing PMI. We're going to be live streaming up to that event. I'm going to be taking a look at some charts, sharing with you what I'm currently positioned on. And it has been a weird couple weeks for me. I'm not taking a lot of trades. I've been waiting on the sidelines for a lot of stuff. I'm getting a lot of neutral readings on, my strategy. Neutral meaning like no trades, no strong biases or signals. Everything's flat. You've got, except for the dollar. Dollar's up this morning. S&P flat, Nas flat, Dow Jones flat, Russell flat. Chinese and Japanese markets up again. I mean, what the heck is going on with China? Do you guys see this? Are we all looking at the same chart right now? This is the Chinese stock market. Stock markets go up in the US on average about 8, 9, 10% or a year. 10% if you're in a great bull market period, 7% if you're in an average period. All right, so that being said, and I'm saying 7% per year. China's up currently 25% in 11 days. So China's rocking and rolling right now. We are at highs that we have not seen. The high here goes back to where we were in January of 2023. And I'm feeling some serious FOMO. Some of you guys might remember there was a period of time where I was very bullish on China, made some good money on China stocks and ETFs. I was trading FXI. I had some Alibaba. I know Chris Pulver, who you guys probably know on the show. He's a regular contributor to the A1 show. He's been super long China for some time. And so this big spike in China, I need to ask him about it, but I'm sure that he's very, very happy with his positioning. Unless he capped his upside with like calls or something, like sold calls. But I know Chris has just many different plays on China. So he's well positioned for this big rally. So shout out Chris. Not sure if he's listening, but good for him. I wish I was, man. I wish I was. So that's one thing that keeps coming back into center focus. S&P 500, NASDAQ, Dow Jones, not a whole lot to say here. They've trended up. They made a big push up. I'm waiting for pullbacks, but nothing else to do. I'm not shorting the indices. That would be, in my view, the most foolish decision would be. Now, I'm not saying they can't come down because they totally could. I want them to come down. But we're in an uptrend, we're in a bull market, and trying to fight that is just a difficult game. The same principle applies to my friends who are watching gold. You don't want to short a bull run in gold. You just don't want to do it. Look at what a bull run in gold looks like. Okay, this is a bearish period for gold. A bull period for gold, beast mode, right? Beast mode. You don't want to mess around with that. You don't want to short that. Are you kidding me? In my opinion, stay far away. This edge finder thing is pretty cool. I can trade it all sorts of different ways, and for me, I like using fundamental analysis and macroeconomic data to try and make better decisions. What do you like to use it for?
I'm more of a proponent for the COT data or the business forecast tool.
Did your tooth just fall out?
It was my baby tooth. It'll come back. Hey, at least I don't burst into flames when I step out into the sun.
Trading without the Edge Finder can be scary. The Edge Finder keeps you up to date with all the most important market-moving information. Check out the latest COT data, retail sentiment, fundamental data, and so much more. You can get the Edge Finder for yourself with the link down below.
Here's the US dollar on a daily chart. I kind of continue to think that the dollar may find short-term support in this area. I'm not looking to buy the dollar, but I am looking to sell it if we get a bit of a deeper retracement. So perhaps we make a move up to 102, 102.5, 103. In these areas, I start looking for possible short setups against the US dollar. Nothing to do right now. Consolidating at the lows. If we get a big shot to the upside, where am I going to look for setups? Well, here we go. We got a little bit of, we actually have some readings on the edge finder for a change, which is wonderful. Pound US dollar is probably the trade that I look at, or the Australian dollar. Actually, I like all three of these. Maybe Kiwi dollar is my top pick because of the high score on the edge finder. We're getting a plus 10 score, and the Nikkei completely flipped to bullish. Wow, I did not expect that. Systems are, my system is a system though, so I got to respect it. Okay, so where were we? We'll come to Nikkei in a second. Let's stay on task with the dollar index. So my signal was produced, my system's producing the Australian dollar, the pound US dollar, the Kiwi dollar. Okay, let's have a look at those really quickly. So now that, and I'm walking you through here my daily process. Again, this is my watch list. This is what I'm looking for potential setups. And we have these three coming into focus as a possible bullish setup. All right, let's take that with us and let's go look at those charts. Pound US dollar is the first one. All right, this is starting to look like potential setups. Finally, I've been waiting for so long to get some good setups. 38.2 looks interesting. Maybe wait a little bit patient, get the 50% retracement. Idea here is looking for continuation on the long side. Stops below structure. That would be trade setup number one for me. We have edge finder confirmation. We got good technical uptrend pulling back to a support level. Do you have any thoughts on did you see what the news is?
The news of what?
There was apparently some potential plan of a missile launch from Iran to Israel.
Oh.
Yeah, it just dropped, and I found it really interesting that it dropped like right at 9:30 as soon as the stock market opened.
That just happened?
Yeah, that was the big drop, because I was looking, I was like, where's the data doesn't come out until 10 a.m. You got PMI and JOLTS, but it seems like this morning there's a little bit of a sell-off off of potential violence in the Middle East, and we do see that in gold as well. Gold's up 1%, silver's up a bunch, and then look at what oil did. Oil was like down 2% this morning and is now up almost 2% already.
Nick, do you realize that this conflict has been going on for a year now?
Isn't that crazy?
That first attack, or I guess
October,
I don't know. Like,
yeah, you're right. October 7th, right? That was the big first day, I think.
I guess that's what set off the big event. I guess there have been tensions for forever, but man, that's actually sad.
Yeah, sad, scary stuff. And again, we're not hoping for violence in any way, and hopefully things resolve peacefully. In terms of what it's doing to the market this morning, Nasdaq's down 0.8%, S&P down 0.7%, Russell's down 1.2%. What I noticed, Frank, specifically is look at the VIX, up 13.4% on this. And these are tricky because for me, Frank, I don't know how exactly you handle it, but like you can't foresee this coming. There is no predicting this was going to happen. So when it comes to like trading it, how do you trade? I mean, Nasdaq's down 1% in the blink of an eye. How do you even prep for that? Well, in my opinion, you just stay positioned small and you stay disciplined. Like, how do you even factor this into your trading?
I just, regardless of geopolitical tensions, I know that news is coming out.
Mm-hmm.
So at the opening bell, I decided to stay away from taking any trades. People have been watching in the Discord. I've been doing credit spreads. So I've been selling option spreads. So basically calling the top or bottom. And to get that, you need volatility. And today we're going to see a lot, I think. So I don't know whether or not I'm going to take one of these plays just because the the volatility could be very high.
Hmm.
So I don't know. I still hold VIX, although it
You have a
expires.
long position on it?
Yeah, one of them expires tomorrow,
Okay.
which is it was actually worthless until today. Now I'm actually up, which is crazy.
Yeah, and I was going to ask you about that. So like if you're up on the VIX or you're in positions that are moving hard today, do you think I mean there's no telling what is going on in the Middle East. Like we don't know. We're not there. We're not finger on the pulse. But let's say next up we do know that we have, as you mentioned, you got JOLTS numbers, you got PMI numbers. Let's say that spooks the market even more. Do you just take profits off that kind of thing, or do you I don't know, how do you play it?
Yeah, I think I might look to just close this VIX call because I don't have any time left.
Okay, yeah.
I have another one out to the 16th, so I may hold on to that one. But I don't know. I don't know what would have a greater impact. I remember in April when there was some really bad tensions, we saw the S&P and the Nasdaq drop significantly. It was like a Thursday afternoon. I think it was at like 2 p.m. Everything just tanked. So, you know, JOLTS, I guess, could have a positive impact if it's higher, but I don't know. We see a lot of news in the Middle East, so I'm not sure exactly how impactful this is going to be on the markets. Um, it's really hard to tell. I don't like to trade geopolitical events.
Yeah, I'm the same way.
I guess
Like I feel like
like
you can't foresee it, you can't predict it. Like with economic data, which I think is what you and I may base most of our decisions off of, we can map that out. I mean, that's the whole purpose of the edge finders. Like we can map it out, we can see where the trends are headed, we can kind of try and make an educated guess of where they might be going next. But with geopolitics, there's no telling. And this you know, the Middle Eastern situation, and then, you know, Ukraine, like those are very complex matters that obviously, you know, we're not the geniuses on the analysis side of that. So trying to focus too much energy on that is not really fruitful. That being said, gold shooting up here. Do you have any positions on gold? We're up 1.3% on gold today.
no, it dropped 1% yesterday, and let me pull up a chart on it.
Mm-hmm.
I have the horizontal black line was 2,600. If it had dropped another 1%, it would have hit that previous high, which would be a nice place to enter, in my opinion. But then we had the rise in this news, I guess, that I just heard about, which is likely going to be good for gold. As sad as that sounds,
Yeah, it's
just
weird.
metals and defense stocks, they just start to go through the roof when you hear about this sort of thing. So, no, I'm still waiting on gold. Who knows? I'm not really sure if this is going to be a intraday spike and then a return to the lows or whatever. But
and I think that one thing to point out too, Frank, is like, so when gold spikes on these things or oil spikes on these things, it's not necessarily that like the phrasing of like, oh, it's good for gold. I think the real answer is it's actually just bad for risk assets, and gold benefits because it's not a risk asset, right? It's more of a risk off asset. We have an initial bit of a reversal here.
I don't see anything yet, but
PMI came in light. We're going to test our theory here, Frank, of whether or not good news is bad news or bad news is bad news. We don't know. We'll see. JOLTS came in better than expected. So worse data, good data, worse data. Market's bouncing slightly. Which one do you look at the most out of these three, Frank? Are you looking at JOLTS or PMIs?
JOLTS.
Okay.
So manufacturing, I don't think is as big of a deal. I think services is a bigger impact for the U.S.
Yeah.
Since we buy everything.
That's right.
I think JOLTS is number one, mainly because I think labor is number one right now. If there's no signs of cracking in the labor market, then I think we're at a good place. So I would say if JOLTS, ADP, and NFP come out strong, that's probably going to be good for the markets. Probably going to see another all-time high, in my opinion. But again, limited upside. So I don't think we're going to run too far.
Okay.
I think we have more risk taking long plays to the upside than we do if we were to take a play, back lower to a retest on some level.
Yep. So again, that JOLTS number coming out at 8.04 million. What does this tell us? It tells us that the expectations for how many job openings are available in the U.S. was 7.64 million. It came out at 8.04 million. So more jobs available than previously expected, showing a little bit of a stronger than anticipated labor market. Now, how does that impact the markets? Well, it depends which area of the market you're talking about. For gold, this value's not particularly good because it might cause the Fed to be less willing to cut rates. If the stability in the labor market is pretty good, we may not see rate cuts as fast, which could be strong for the dollar, and it could be a little weaker for gold. And for stocks, that's the challenging question that Frank and I go back and forth on. Is this data good or bad for stocks? On one hand, you could say strength in the labor market is good for companies because, that means that companies are doing well. Their earnings are probably going to be good. Okay. But then on the other side, what about the more rate sensitive stuff, which if we don't see as many rate cuts, is that going to hurt companies? And the answer is there's different companies that are more or less impacted. Right now, the reaction to this number is mixed, which is fair. On the stock market side, on the gold side, we saw a little bit of a dip, now a little bit of reversal. Same thing with silver. Oil seems unfazed, probably still just hyper-focused on the geopolitical front, and the dollar index is slightly up today.
Great.
I think we're on the same page, Frank. The jobs data was good. That's what you and I have been rooting for. We have been, for the better half of the last 2 years, we have been fans of, we don't want rapid deteriorating economy. We don't cheer for rate cuts. We cheer for strong economic data and slow rate cuts. And I think we got more evidence of that today with the JOLTS number.
Yeah, I agree. And we'll see on Wednesday. Private payrolls have been taking a big hit too.
Mm-hmm.
I think that's going to be very important. And NFP obviously will cause a reaction, although it's been very inaccurate, I'd say.
Yep.
But, I think what's more important is to look at the revision of last month. So whenever NFP comes out, check out what the revision says. Right now, the previous number is 142. If that's a significant change on Friday, I think that will cause a major reaction, probably a lingering one. So we'll have the initial one on the current one beating or missing forecasts, and then if previous is revised higher or lower, I think that will be the bigger move for the day, the actual direction.
That's a good reminder too, just to say that, the rest of this week, we have a lot of really key data. We'll be analyzing it through the rest of this week. A big day here, right? Big swing to the downside for the indices. And before we get started with anything else, I mentioned this earlier, but can you confirm you've got good sized positionings in China, right?
I do.
Good for you.
For sure. Yeah. So I am long Alibaba, Baidu, FXI, KWeb, and JD. Those are my trades. They're in my watch list. P&L wise, it's been a great week. And there's still, there's more. I think that we have to, we've got to expect some type of pullback. Alibaba with yesterday's price. I had said that I think bull flags would be the best thing to look for. As opposed to, this big crazy 20-30% rip to the upside and then it fades the entire move. Obviously, that's more of a problem than a good thing. But when I look at the charts, having this move just kind of be waiting and building and then it just erupts, that was a good thing. So what I'm looking for is if this eruption move is not just hardcore faded, but rather it pauses, like having a move up in a pause gives a bull flag potential to have more continuation. I'm not super greedy here when it comes to where I'm willing to get out of the trade. If Alibaba can come back up to the same high or my symmetry would be great, fine. I mean, if we have a bull flag and it pushes up again, I'm probably going to take some profit. I've been looking at this as like maybe 1 to 3 months of holding. And I don't know if that's good or bad, but for me, as far as the timeline, if I hold for 3 months, that's essentially putting me into like the highest seasonality probability of the market's just going to find a way to melt up through the rest of the year.
Yeah.
There's all sorts of longs that go into the end of the year. There's destinations by December and January. And in the options market especially, that's really important that we just see these positive drifts usually. And if China's a part of that this year, then I think that's a good thing for the global economy to have, China rallying as well as the U.S. rallying. But we're starting out October to a little bit of a shakeout here in the U.S., which it's not a big deal. Like, what do you expect here, Nick? I mean, we can't just keep making all-time highs every single day, so we're having a little bit of sideways movement. But China's been great. I'm not gonna lie. I still got upside. I'm repositioning. My favorite one is, I own shares in Alibaba. I own shares actually in all of them except KWeb. KWeb is just options, but I have shares in all the other ones. And so from that standpoint, it's been a good run so far. And I'm still looking for, a lot more upside. But like I said, 1 to 3 months.
Do you have upside capped on some of those positions? Like, do you have like sell calls on them too?
One of them. I think it's Baidu. On Baidu, I am capped around the 115 is my lowest covered call. And then the other ones are 125s and 135s. So let me double check that here. If I go Alibaba, I have nothing covered on Alibaba. And then on Baidu, I am covered at 125, 130, and 115. Yep. So like I said, so those are my covered call levels. And those are out to the end of the year. I probably won't roll those because I don't necessarily want to go out farther in time to get the credit. Okay. So I'm good with it right now. And I'm willing to also, if it hits like 130, 135, 140, I can also just take it as is. Like I've already maxed my profit from, I bought the shares in like I want to say I bought the shares in like the 80s. Yeah. My break even on Baidu is probably like mid 80s, high 80s. And if I cap it at $40, it's like, that's still a pretty good run to make some profit. Yeah. So I just don't want to get greedy. That's all.
Well, definitely big congrats on the China play. I wish I was with it. I was on FXI for a while and I made some good money, but dang, I wish I had it right now because my goodness, FXI is making a serious move. Fortunately, though, I did make some good money on the silver run up due to that. I did get taken out for a profit on that move, but the big burst in China, I think I sent you some info on my silver trade, which went really well too. So I was able to make some profit off that move. So
I know that today we had manufacturing PMI that came in a little bit softer than expected. 47.6 expected, came in 47.2. The JOLTS job openings came in higher than expected by around, about 400,000 jobs. The ISM manufacturing prices came in softer than expected, which couple things. The market needs to see good data. Okay. So today's price reaction doesn't necessarily show good data, but I'd say that the manufacturing PMI has always been, since December of 2023, we've been below 50. That shows that manufacturing sector is contracting. You go back to the graph here. So here's where we went sub 50, December 2022. Oh man, it's even longer. So for almost 2 years, we've only had one positive push. And surprisingly, that was April of 2024 when the market was down 6 to 8%. Our PMI numbers actually popped above 50, but that's lagging data. So point is, manufacturing PMI has never been impressive in the US, and we're below 50 and have been for a while. Thursday, we have the services PMI. So tomorrow we have the AD, which is the ADP, which is precursor to non-farm, forecast for 124. Pretty quiet from there. The ADP comes out at 8:15 a.m. And then Thursday, another round, 8:30 unemployment claims, and then ISM services PMI at 10 a.m. and see if that matters going into a non-farm payroll week, which is Friday. I think the big thing for non-farm payroll is going to be 4.2. This is the expected unemployment rate. If it comes in higher, it's probably not a good thing for the market to see. Comes in lower, that's probably a good thing to see that the 50 basis points cut the Fed did is at least stalling the trend that we've been seeing with the unemployment rate went from 3.4 all the way up to 4.3 and it did it in about a 9-month period. That's how the SOM rule got triggered, right? Which is supposed to be this undefeated recessionary indicator. We have the disinversion of the yield curve, which is this undefeated recession indicator. You just don't have an exact timeline on that. So it's a weird situation where all these things could be pointing towards trouble ahead, right? But with the 50 basis points cut, plus the Fed looking to cut another 25 to 50 basis points, it's likely going to somehow stabilize. And what we have to get through is don't disappoint on the employment side. Don't disappoint in the inflation side. Don't have a ton of election drama. Don't have disappointment in the earnings season, which is kicking off here next week. We only have like maybe 20 or 30 earnings this week. It's pretty quiet. So we had 14. Nike's a big one today. I noticed my Nike position. I already closed out for profit. I don't have any exposure on Nike right now. I had a ratio spread that I took profit on. And that's it. And everything else is pretty quiet for the day. So for the rest of the week, we only have 9 more companies reporting earnings. You go into next week, gets a little bit more noticeable as we not the numbers, but we start kicking off with the financials. We have PepsiCo for kind of consumer staples, but then we get into Wells Fargo, JP Morgan, some of those financials. Let me go into Friday. We have BlackRock reporting earnings. We've got the Bank of New York. We've got Wells Fargo, JP Morgan, Delta Airlines. Ooh, interesting. Delta Airlines on Thursday. Domino's Pizza, that'd be one I might keep an eye on. So, all right, we got some earnings plays getting sprinkled in 7th, 11th, and I think the big earnings season is going to be kicking off on the 14th to the 18th. Yeah, look at that. So on the 15th, we got 672 companies reporting earnings. It's a needle in a haystack, but we've got Tesla earnings on the 16th. We've got Netflix. Like, guess what? We're going to be trading some earnings together. So if you're interested in the Pulver Alert service, we've got the link posted in the chat. I will be taking a lot of trades through earnings season, probably I'd say 20 to 30, most likely. Trade the Mag 7, trade the high volatilities, trade some of those semiconductors, combination of buying those options, selling those options. I'll see how they're priced out. I try to make it as routine and mechanical as possible. I don't just, hey, I'm going to go long. It's like I trade options in like a probabilistic way. I've had a pretty good run the last 3, 4, 5 years. Like most of the trades I take are winners. They're not all winners. Like I took a trade where I was profitable on the Qs, profitable on the SPY. I took a small loss yesterday on Nvidia, but I added a hedge. That's down to 102. Let me see what actually Nvidia is doing today. So Nvidia is down to 117. I'm not saying I'm happy that I got out of Nvidia, but it did save me about $5 of risk, and so I took a small loss of about $3. But I made profit on the Qs to like $2.50. I took a break even on the SPY, so that kind of washed the positions overall. But if Nvidia ends up getting down to the low 100s, and this is a 102 checkpoint, if we get down to this level, I'm going to see what my Nvidia trades are right now. Again, they're probably not super profitable, but if price is falling aggressively, I put in the 102 long put. I've got some ratio spreads when we had that August 5th bottom. I would own Nvidia, at really low prices. I'd own it at 75. I'd own it at 67, which I doubt we're coming that low. But right now, I'm up about $234 on my hedges for Nvidia. So right there today, I've already made up for most of my loss between QQQ, SPY, Nvidia, plus this Nvidia hedge. I'm already up like $250 net profit. So I want to see if there's more in the tank. If we go lower on Nvidia, let's say we have this discussion, we're at like 110 or 109. I might look at taking profit if my Nvidia hedge is up $500, and I'm good. I'm not looking to be greedy, but the trade was, are we going to come down and revisit this low? Are we going to find this 200 EMA? Which, by the way, this is a way more overextended chart than the S&P. I like this 200 EMA. This goes back 426 bars on a daily time frame. I would be very confident in saying that Nvidia is probably going to find this 200 exponential moving average before we make new highs. That would be if I'm just going to make a forecast and kind of proclaim, I think that we'll find this 200 exponential moving average before we make new highs on Nvidia. So that is why I'm taking the hedge the way that I have it. It's pretty inexpensive. The 102 was my long put, cost me a couple $100, and it's already up. It's probably almost close to 100% gain right now. Maybe not. What did I pay for it? I paid $1.95, and right now, because I'm in 3 contracts, it's probably only up like 60 or 70 cents. Yeah, so I'm up about 60 to 70 cents, which profit-wise, let's say we're up about 70 cents out of 195. I'm up about 35.5%, give or take, which is fine. But for a hedge trade, I'd like it to be higher. I'd like it to be, 50% profit, 100% profit, 150% profit. I don't have a cap on the profit. I'm not selling against that. So anyway, I'm just going to let that run for a little bit and just keep an eye on price. Okay. All right. What else do we have here? So let me just go through the list. Let's go top down. We'll do some currencies. Currency strength chart, a little bit wild and crazy today. Japanese yen was super weak, and now it's at the top of the food chain. You got the New Zealand dollar at the bottom of the food chain. The Aussie dropped right out of the gates at opening bell. CAD is up as well today. Dollar and Swiss. So we have some risk-off flows. So I'd say risk-off flows at the top when you have Japanese yen on top along with the dollar and the Swiss. So those are your, risk-off currency pairs on top today. You have New Zealand, pound, and Aussie on the bottom. So definitely some risk-off flows. You can see that illustrated by the direction we have today. This is sliding all day. You look at the futures market this morning. I mean, we have just smashed at opening bell. This is ES, so this is your E-mini futures for the S&P. Just, I'm not going to say crashing. I dislike it when people are super, I guess using hyperbole. We're just like, oh my gosh, it's crashing, it's ripping. It's like it's moving like 0.5%. But it is a straight line. I mean, we have dropped around 70 points or so on the S&P for the futures market, but on the NASDAQ, it's dropped way more. Here towards 2250 to 9. I mean, we've dropped 300 points on the NASDAQ. So in the NASDAQ is way more volatile. If you ever trade futures like NQs or MNQs, you're getting about $20 per point on the NASDAQ futures, about $2 a point on the micros. But it adds up when you get 300 points. I mean, if you somehow got this trade and grabbed 100 points out of that, you get $200 on a micro contract. If you get 100 points on a full, you're getting, it's $2,000. It adds up quick. But what a crazy move it was right out of the gates.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.